What's going on, guys? Today we got a great episode with John Pompliano. In this conversation, we talk about Bitcoin's price going down, what's going on with the ETFs, why Vanguard is all of a sudden capitulating and giving access to people, how I'm thinking about the Fed chairman pick from President Trump, if we should actually be worried about what's going on in financial markets, how political goggles are removing all critical thinking from financial markets, and how you can avoid that. And then we finish up with Michael Dell and Susan Dell's recent donation of $6.25 billion to help fund 25 million American children an account where they can start investing at an early age. All that and more in this conversation with John Pompliano. All right, John, what's first topic?
Bitcoin's price. That's what everyone wants to know. Where we go from here, it's around 90,000.
It's in the toilet. It's in the toilet. People are upset. That's fine. Just call it what it is. One of the things about the Bitcoin community is we are amazing at marketing when the price is going up. People get on Twitter. I'm one of them. There's a lot of people. The memes are amazing. All the excitement, the enthusiasm, the FOMO. We go on television. We got the articles being written. Everyone is like, this thing's going one way. One of the problems is that usually when the price starts going down, everyone's like, they start trying to explain it away, or like, oh, it's just a slight dip. It'll be back, whatever. That's normal because you're a bag holder. But I do think that the best investors that I've ever met, one of the most impressive feats or traits that they have is that they are incredibly intellectually honest. And many times what they're able to do is they're able to hold an opinion very strongly, get new information and switch around and have the exact opposing view very quickly. So if you look at, there's great traders, great hedge fund managers, great investors, the ability to change your mind. Now, the beauty of Bitcoin right now is the price is down. That's fine. Just say it. Price is down. No problem. Things volatile. Volatility is part of the features of Bitcoin. It's not a bug. You need volatility. So you need things, if they go up a lot, they're going to go down a lot. And over time, you want to see them continue to move upwards, but you need that volatility back and forth. So Bitcoin is volatile. Actually, volatility has increased a little bit over the last couple of weeks. That's a good thing for Bitcoin. Now, that volatility has worked against people who are long the asset. Okay, that doesn't feel good. Went from 126 all the way down to 80,000, almost a 40% drawdown. Now we're sitting around 90K. Okay, guess what? We've seen this happen many, many times. There is something like, if you go back and you look, during the global financial crisis, stocks drew down 50%. Global financial crisis. They made movies about this thing. They wrote about it. They're still talking about the global financial crisis like the Great Depression. It was bad. In the crypto market, specifically with Bitcoin, Bitcoin has experienced the equivalent of a global financial crisis every 18 months for a decade. So for a decade, Bitcoin has gone through a global financial crisis every 18 months. That's crazy. People, they got strong hands, right? They're not shaken out by volatility. If this is the bear market, only goes down 40%, Bitcoiners will be celebrating. They're used to 80%, right? So I think that's kind of one big thing. The second thing is, maybe the more important part, is that Bitcoin going down actually is happening while stocks are going up and gold has been going up. So if you look at these charts where they put like global liquidity, gold, and Bitcoin, everything was tracking. It was high correlation until about Q3 this year. Sometime in July and August, all of a sudden Bitcoin broke from the pack. Global liquidity and gold continued in the same trend, and Bitcoin broke off and started going down. Again, you want to be intellectually honest? Bitcoin over the last 12 months is performing worse than US Treasuries. That's not a fun fact, right? That'll make people feel good. I don't like US Treasuries. I've been saying that for a long time. I think that they are created in a way, especially with the national debt continuing to go up, where they're only going to go down over time. If you look at TLT is down 42% over the last 5 years. It's down 1.25% in the last year. Okay, that means that if you buy bonds and you hold them, you're probably going to lose money. Now, if you go and look at Bitcoin, Bitcoin's down 10% over the last 12 months. So Bitcoin is doing worse than Treasuries. When you put it that way, that's taking those marketing skills that everyone has on Bitcoin on the way up, and now we start talking about it when it's going on the way down. But again, if you're a Bitcoiner, you understand the asset, and Bitcoin's price goes down, the Bitcoiners I know, they're excited because I get to buy more Bitcoin at a lower price. Everyone loves when it goes up, but people like to get a lower entry price. And so if you are still long-term convicted, if you are not shaken out by the volatility, if you are not undisciplined because you went and got a bunch of leverage or, a forced seller or anything like that, and you are continuing to acquire more Bitcoin and you're able to get it at a lower price, then those people are excited. And so again, nobody likes when the price goes down, but I do think that there's a nuanced conversation around that. Now, in comparison, the stock market right now is somewhere between 1% to 2% off its all-time high. And there's people who think that, AI bubble has popped, the world is ending, stocks are going down, everything's overvalued, all this craziness. I don't think any of that's going on. And so again, the more you hear the critics, the more you hear the people who are critiquing, the more that you hear people who are calling bubble, the more that Michael Burry's out there tweeting up a storm about whatever nonsense he's saying, the less likely it is that there's a bubble, right? Remember what I said to you back in April. The more everyone is telling you the world's going to end, the less I'm convinced. Because if everyone thinks the bad thing's going to happen, there's consensus around some bad negative event, that's probably not going to happen. And you probably have a surprise to the upside. Usually you get the negative recessionary periods or the negative market panic, kind of big crashes when nobody thinks it's going to happen. Good times are rolling, baby. Everything is going up and to the right. And that's when you get surprised to the downside. And the surprise is part of the pain. Here, everyone's screaming about Bitcoin's going to 50K. Everyone's screaming about the stock market bubble, right? Again, I don't know what's going to happen. But what I do know is that the more that everyone has consensus that something's going to happen, the less likely it probably is actually going to happen, in my experience in financial markets. And so it's the surprise factor that's worth paying attention to. Now, the answer could be Bitcoin's not going down a lot more. It's not going up a lot more. It's just going to go sideways for a while. I don't know. Could happen. If you look at the last 2 weeks of the year, kind of December 12th to 15th through the end of the year, usually pretty good, both for stocks and for Bitcoin. And so I think there's people who are looking for that Santa rally, the chase into the end of the year. I don't know if I would pin my investment strategy on what's going to happen in the next 28 days or whatever it is. But I do think that people should be very intellectually honest. Bitcoin was up a lot at some point this year. It has now come down. It's now down 10% over the last year. At the same time, if you go back to November 1st, it was at $69,000. It's now trading at 90. So it's up from November 1st last year. All these time lines that you pick, you can kind of manipulate the data to tell you good, positive, negative stories. If you look at the annual compound growth rate of Bitcoin over the last 3 years, 72%. If I told you that you could have bought an asset 3 years ago and it was going to go up 72% compound annual growth rate, and by the way, people are going to be pissed about it, you'd be like, what? That's crazy. But we're down 10%, right? And so again, it all comes into their psychology, then there's the math. And what I see with Bitcoin is I see adoption increasing. I see the network being stronger than ever. I see it being more valuable than ever. I see more and more companies adopting the Bitcoin network or holding Bitcoin or doing something with Bitcoin. I see nation state adoption. I see the regulatory environment in the United States becoming more of a tailwind than a headwind. I see people internationally starting to talk about Bitcoin, use Bitcoin, adopt Bitcoin, both at the nation state and citizen level. All of these signs are good for the structural health and long-term prospects of Bitcoin. You're going to get volatility along the way, right? Doesn't make it easier when you're feeling it. Just, I wouldn't be worried.
Narrative is one thing, but reality is another. The asset being down 40% is a tough pill to swallow for a lot of people.
Of course. Look, if the first time you bought Bitcoin was at 126, you're like, I hate this thing, right? If you were buying Bitcoin at $1,000, you're like 126, 90, Again, like I like 126 better than I like 90, but I'm up 90x. How mad could I really be, right? So again, it goes back to, it's all about this perspective. The problem is when you get into these, especially in the blow off tops, 2021, if I remember the data correctly, at some point in 2021, 50% of people who held Bitcoin in the United States had come in 2020 and 2021. So half of the market. Now, again, it's really hard to measure that stuff, how accurate, whatever. Just directionally, a lot of people, the first time that they adopted Bitcoin was in 2020 and 2021. Well, guess what? When it went down, they were like, I didn't know that this thing could go from $65,000 to 16. People who had been around are like, man, I was hoping that wasn't going to happen, but like I lived through this before. So I do think that it's not just the narrative, but it's also what is the perspective that somebody has. And so to your point, yeah, down 40%, that really hurts for a subset of people. There's other people who don't like it, but they're in a much better position and their cost basis is lower. And, they're kind of like, hey, it's part of the game.
One subset of people are ETF holders. The ETFs, notoriously, especially the leveraged ETFs, have not performed well in this environment. How should an investor navigate the differences between holding spot versus the ETF and also the leveraged ETFs, right? There's a bunch of these different products.
There's a famous quote that I'm going to paraphrase. Basically, the three things a man should avoid in life is booze, women, and leverage, right? Those can be the demise of any man. And so, guess what? Booze, I can't help you with. Women, I can't help you with. But leverage, I can talk about, right? And when it comes to leverage, just be careful, right? Understand what it is. For the average person, you should avoid leverage at all costs, right? Now people are, oh, well, what about a credit card? I'm talking about like in your investment portfolio, trying to get high degree of leverage. That usually does not end well. Yes, you will be able to find the one-off story of some guy who's some amazing trader or some guy who was able to, make some bet that was probably more luck than skill and he used leverage and it worked, whatever. It's a different thing between levering up 5x on an ETF than using leverage on a real estate that's got cash flow that, has some degree of like rational leverage. Again, avoid bad things. You can use good things where it's appropriate. It's kind of like food. People always say, eat less. Well, like, no, you can eat more. Just eat more good food and eat less bad food, right? That's the whole idea. Same thing here is there are certain things you use in your life, a credit card, mortgage, all that kind of stuff. Nobody's running around being like, don't have a mortgage, right? And if they do, they probably are just being ridiculous. And so instead it's like, hey, this is understood to be a thing that people can manage correctly. The banks don't, go in and require some crazy amount of interest or all these things that could blow people up. But a 5x levered ETF on an asset that it's got 50, 60, 80 vol, a 5x or 3x levered ETF on a corporation that holds an asset that's got 50, 60, 80% vol, right? Those are different things, man. That's hard to kind of wrap your head around. Now, with that said, what I find very interesting is that's the negative side, right? So people will always be able to find in a casino, someone's always offering a game that's rigged, right? And it could be rigged mathematically, like just the house wins because the math is in their favor, or it could be rigged in some other manner. But in a casino, you usually also can find games where people can go and participate and they don't have the promise of really crazy, put $1 and win $1 million, but put $1 and win 25 cents, right? The whole idea of you should be getting paid for the risk that you take. That's true in investing. That's true in pretty much everything in your life. So if you think about ETFs, buying the Bitcoin ETF is very similar to buying Bitcoin, right? Now, I will argue that you actually have less risk because you're not taking custody risk and a number of other things. And so your return is going to be slightly lower than what Bitcoin's going to provide because there's a fee associated. It's a very small fee, usually 20, 25 basis points, right? But you're taking less risk than the person who goes and buys spot Bitcoin. So you should expect a little bit of fee drag, right? Now, what I do find interesting is there's a lot of these financial organizations that are all of a sudden starting to say to themselves, we can't stop our clients from buying this. We may lose clients over this. They may actually not want to have their assets here or use our product if we do not allow them to buy this stuff. And so Invesco, I think, is a big one. Vanguard, right? Some of these folks who either were slower or who were taking a rational, hey, we're going to evaluate this, see if this is right for our clients, all the way to some of these guys were like, nah, we're not ever going to let our clients do this. This doesn't fit our style. Now they're all like, we have to let them. Right? Imagine if they were like, NVIDIA, nah, we're not going to let anyone buy NVIDIA. People would just be like, what, dude? Like, what do you mean I can't buy a stock? It's on stock exchange. Same thing here. It's like, now you're going to pick and choose which ETF people can buy? That's not the world we live in today. The internet has busted down that like monopoly on paternalistic oversight and like, oh, what I should do with my money. People say, just give me all the options. Let me do what I want to do. Right? And I'll live and die with the consequences. So I think that seeing the Vanguards and all these guys start to now give access to these ETFs is less about they're like changing their mind. And it's much more a story about just like the voice of the people will eventually be heard. And my guess is someone internally, there was a piece of data, there was some sort of information, something happened where they were like, we have to do this because that's what the customer wants. And that's why you see change. It almost never is like, oh, I just woke up today. I didn't like it yesterday, but I like it now. All of a sudden I'm convinced. It's usually customer driven, which is exactly how it should be. Today's episode is brought to you by Xapo Bank. Are you a Bitcoiner looking for yield, security, and liquidity? Xapo Bank is a fully licensed private bank and a virtual asset service provider. They're regulated in Gibraltar, and they've built one of the most trusted vaults for Bitcoin custody since 2013. And now they offer so much more. Security is just the start. With Xapo Bank, your Bitcoin can grow every single day. Members earn 3.6% APY on USD deposits and 0.5% APY on Bitcoin balances up to into Bitcoin. And they've got interest paid daily in Bitcoin. That's pretty cool. You can also spend worldwide with their premium debit card, earning up to 1% cash back in Bitcoin and no foreign exchange fees. And when you need liquidity, you can borrow against your Bitcoin up to $1 million instantly with no hidden fees and no early repayment penalties. That means that you can access cash without selling your Bitcoin. And if you ever need help, you can talk to a real person too. Zappo's expert team is available 24/7 to answer your questions. Pomp podcast listeners, that's you, who sign up as new users will receive $150 off their first year of membership. Just a heads up, this special promotion for Pomp listeners runs until the end of December, so go get it while it's hot. Go straight to zappobank.com/pomp to start the application. That discount will be applied to your account after registration. That's xapobank.com/pomp. Promotion till the end of December. Go to zappobank.com/pomp today.
First mover advantage is a real thing in a lot of different industries, especially when you're building. When you think about Vanguard, well, when I think about Vanguard, I think, hey, we're not looking to acquire more customers. We just don't want to lose the customers we have, and we don't want to lose their assets, right? Most people have a Vanguard account that I know because it's their retirement account, right? They don't actually use it as like a brokerage itself. Do you agree with now these companies that haven't moved yet? Vanguard just did it, right? Allowing access to the ETFs. Is it more of a, hey, we don't want to lose customers and we don't want to lose assets on our platform? Or is it, hey, we need to attract the younger generation, the younger investor to actually use these products and services?
I think that they're trying to do both, right? Is you don't want the melting ice cube to melt any faster. So you want to keep the customers that you have. As your customer base has increased in age, obviously some of them is fact of life. They start to, pass away. Their assets get passed down. They may get taken off the platform, all that kind of stuff. Also, there's competition now, right? It used to be that, hey, once you kind of had it, it was very sticky asset. It's still pretty sticky, but there are now tools in the market that do things that you don't do, right? And so you've got the competitive pressure, but also you need to grow. And so how do you grow? Well, one thing is stop losing the customers you got, but also two is go get new customers. And what a lot of these people are trying to figure out is if we are going to lose some of our existing customers, can we go find net new younger people to replace them? So if we lose one, can we go find two? That'd be one, plus one in growth. Well, that's very hard to do when you have a product that it's got a lot of technical debt. It's built for a different generation. It is very different in terms of the value proposition. One of the things that I see a lot of times in kind of finance and in crypto, et cetera, is people will be like, we have a phone number. Well, guess what? That's really, really valuable to some people. It's usually not that valuable to an 18-year-old. The 18-year-old is not choosing which product they go to because there's a phone number, right? But guess who is? 45, 50, 55, 60-year-old, right? They like that. And so I think that's the difference here is it's kind of some of the features are targeted at certain demographics versus like, again, I'm sure there's somebody who's watching this who's 65 years old and they're like all over the prediction markets. That's not normal, right? Like in terms of the average user of these prediction markets is much younger. So if you go and you put prediction markets next to stocks and crypto, guess what? You're going to get more young people, right? You're not offering a phone number because that's not what they want. So I think it's all about like the product design and the market positioning and all this stuff is, people are fighting over who gets to own the relationship with the customer.
Call me old. I like the customer service number.
Yeah. I mean, look, again, if you have a problem, then you're like, oh, I love the fact that there's a number there. Of course, right? It's like the airlines. People are like, oh, use the app. Do like, no. If I got a problem, I want to talk to somebody, right? Because guess what? The person sometimes can, do things that you can't do in the app. But I'm not picking which airline I have based on who answers the phone fastest, right? It's like a nice to have. I'm not picking which brokerage I use based on do they have a phone number or do they not. Again, it's a nice to have. I don't mind that they have it. I like it when I need it, but I'm actually going to pick based on these other parameters. And so I just think that like that's part of the equation here, right? If you were to start a brokerage from scratch and say, hey, we want to go and we want to compete in the marketplace, what's our box, right? How are we different? Where do we need to be the same? What's our positioning? Who's our target demographic? What's our fee schedule, our business model? All these questions, these people are all trying to go through and figure out.
I think most people pick brokerages based off fees.
Fees is definitely a big one. I mean, Robinhood is probably the quintessential example of they came to the market and said, no fee stock trading, obviously pretty valuable value proposition. But I think that, look, fees are a function of if I'm paying a fee, what am I getting in return? Right. So again, I think Robinhood really proved out this premise that people just wanted to access the market and pay low fees. Okay, that's one type of user. Private banks, they don't have low fees, right? But they're providing a heck of a lot of other things to their clients that those people are looking for. So again, you can have no fees and have a really big business. You can have really high fees and have a big business as well. It's just you're cutting up the market into different segments. And look, Bitcoin is unique in that Bitcoin really serves all of these people, right? There are 15-year-old kids who get some money for their birthday and they go and they buy some Bitcoin. There's 90-year-olds who are going to, chew your ear off about the fact that every government fails and the currency is, bogus and they've got gold. Now they got some Bitcoin, right? And everything in between. There's some people who are going to hold self-custody. There's some people who are going to put it on an exchange. Some people who are going to put it in the ETF. The beauty is Bitcoin is what you want it to be, right? What you want to use it for, it's up to you.
Okay. Let's switch gears a little bit. Trump supposedly picked a Fed chairman, got a new guy, new girl, whomever. What do you think's going on? You think he has someone picked?
He said that he has selected who the person is going to be, but he's not going to tell anyone. That's not surprising. I think most people expected him to make the pick before the end of the year. I actually think most people expect him to announce it before the end of the year. We'll see if that happens. A couple of things. One, whoever the person is, who I do think that is probably Kevin Hassett, they're going to implement Trump's policies, right? No different than when other Fed presidents or Fed chairmen have been selected. The current president is putting someone there who they think is good. Well, guess what? The person that they think is good is somebody who sees the world similar to them, is probably on board with their economic policies, is probably going to follow a similar path to what they're doing, on the administration side. So nothing new there. I do think that people underestimate this whole shadow Fed phenomenon. So once they announce who the new Fed chairman is going to be, Jerome Powell is still a Fed chairman. But he kind of has a guy who people are like, okay, this is what Jerome said. And then hey, well, do you agree? Is that really going to be the policy in 6 months? Right? What do you think? Oh, he's saying he's not going to cut rates. Are you going to cut rates? So now all of a sudden you get this almost like mom and dad, kids goes to dad, hey, can I do this? No, goes to mom. Dad said, if you said yes, then I could do it. Right. Same thing here. And so I think that that'll play out. And then the third thing is the market is just telling them that they have to cut rates. We have to get to a much tighter, much kind of easier monetary policy, right? And they have to end quantitative tightening. And they can fight it. They can say they're not going to do it, whatever. If you remember, they said if we don't have the government data, then it's not a guarantee we're going to cut in December. Odds went down to 40%. Now the odds are back to 70% that they're going to cut in December. I think they're going to cut in December. I think they should do 50 basis points. I think they're only going to do 25. And I think that Trump enjoys the I know a secret that I'm not telling you, right? It creates speculation, and the media is running wild with it. Who's he going to pick? Who's the person?
Do you think Jerome Powell right now will make a decision for December based off legacy?
No, because I don't think anyone's going to remember what he does in December, right? For better or worse, Powell is going to have two reputations. The right is going to say Jerome Powell helped create sky high inflation of over 9%. And he then jacked up interest rates and caused banks to go under. And then he was too slow to bring them back down. And he created immense financial pain for Americans. People on the left are going to say Jerome Powell was faced with a once in a lifetime pandemic. He was able to navigate it. He was able to get inflation back down by raising rates. And then he was prudent in his ability to manage interest rates. Guess what? Where those two extreme viewpoints overlap, put a little Venn diagram together, the middle of the Venn diagram, that's where the truth is. Did he oversee the inflation? Yes. Did he say that inflation was transitory and he was wrong in that? Yes. Right. Did he hike up interest rates at the fastest pace in history and help to put multiple banks out of business? Absolutely. Did he have to hike interest rates? Yeah, he did. Right. Remember 2021? Shit was fun. A little out of control. Right. And inflation it was obvious it was going to be a problem, right? He had to get it under control. Okay. Has he been too slow to bring interest rates down? Absolutely. But we'd have a way better critique of him if he wasn't bringing down rates at all, right? So it's kind of like, at least he's heading in the right direction. So again, you're never going to please both sides, but I think that's ultimately going to be his legacy is, as many things in society, it's just like, what side of the political realm are you on? Right. And that's going to determine how people think about him. And I don't know if there's anything he can do to change that.
It's the political goggles.
It's political goggles, but it's also like in a weird way, if you think about so much of society today, right? I'll give you a couple of examples. Michigan Consumer Survey. People love when I talk about this, right? Because they're just like, yeah, it's bias. Okay. They used to ask 50% Democrats, 50% Republicans. Fine. Now they ask 65 to 70% Democrats and 35% Republicans. Okay, well, guess what happens? All of a sudden, the Democrats who think that inflation is going to be over 5%, they start to skew the sentiment down because they think that the economy is horrible, Trump's an idiot, and blah, 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 all this stuff. The Republicans, by the way, they're just in the other direction. They think inflation is going to be 1.5%. Right. And they think that everything's going to the moon and all that kind of stuff. Again, the truth is probably somewhere in between. Right. So if you survey too many of one group versus the other, you're going to get skewed results. Okay. Politics. If you go and you look at Pete Hegseth, Department of War, this whole like double tap thing in the Caribbean. Right. Just so we're clear, these are terrorists that are bringing drugs that are going to kill Americans. So what I just explained to somebody the other day, if they had RPGs on the boat and they shot them and killed these people, regardless of whether 1 shot, 2 shot, 5 shot, 10 shot, a lot of people would just be like, yeah, man, you can't bring RPGs to the United States, right? If they were bringing roadside bombs on their little dinghy to the United States, people are like, you can't really bring those into the United States. But drugs, not that bad. Come on, good work, good hardworking people out there, right? Like for some reason, it's just like, no, like, what do you think those drugs are doing? Those drugs are killing people, right? So I think that's the first thing is immediately there is, whether you're on the left or the right, like the thing that they're doing, is it wrong or not? Right? Now, the second thing is, and I've been very clear about this. I have been in situations where I've gotten the firsthand view as to how the world actually works outside of the business and finance world, outside of the United States of America, in any sort of war-torn or kind of violent environment. There's only one language that everyone understands, and it is violence. And people don't like that. People don't want to hear about it. People don't want to think that their country or people they know, et cetera, are involved in that stuff. But there's this famous quote that I'll paraphrase that says, America is free because rough men stand ready to do violence on our behalf in the dark of night. Right? That is ultimately why we are free, is because there are men and women, but mostly men, who put on a uniform, they get a gun, they put a flag on their shoulder, and they go and they do stuff you don't want to hear about. And you may not like it. You may not want to understand it. It's real nice to just live your life and pretend like that stuff doesn't happen. But guess what? It happens. And happens all around the world. Even when the United States isn't involved. Some other man is putting on his uniform, grabbing his gun, putting his flag on his shoulder, and he's trying to go do bad stuff to bad people. And so I think that when you look at this whole situation, now all of a sudden it comes down to this idea of like, depending on which side of the political aisle you're on, how do you view that situation? Is Hegseth wrong? Oh, well, you don't like him because he was a Fox News commentator. Other people, they love him because he was a Fox News commentator, right? All this kind of stuff. Then if you go and you take a look at even Black Friday, right? Black Friday, what the heck? How did that get politicized? Black Friday, there's a bunch of people running around who want to be pro-economy, who tend to be on the right side of the political spectrum. And they're saying Black Friday sales smashed all records. Look at how amazing this is. $11.8 billion spent on Black Friday, just online, set the record. The economy is booming. People on the left like, oh, not so fast. Lee Corso, not so fast. Buy now, pay later. A lot of people are using that. A lot of this is being financed. A lot of this has issues. So that's where you start to get this back and forth, right? Of like, who's right, who's wrong. It's all about politics. And so I just think that if you want to be intellectually honest, you have to be able to identify What are people on the left's argument? What are people on the right's argument? What are people who are independents' argument? And then formulate your own. But I get very, very nervous whenever I see people start saying, I'm just going to regurgitate any party's talking points. And I think COVID was a great example of this. And it's probably why a lot of people got pushed towards Bitcoin was they just kept hearing, especially the mainstream media, but they just kept hearing people repeat the state talking points. And when they started thinking to themselves, they were just like, this doesn't make sense. And the people who were independently thinking started to say, wait a second, maybe I need to take this same idea of critical thought and apply it to many aspects of my life. And I think that a lot of our economy today, our society, through those political lens or goggles, as you called them, intersect with the people who are independent and critical thinking. Doesn't mean they're always right? That you can independently think the wrong thing, but at least you're going through the process. And so if you bring it back to financial markets, AI bubble. It's easy to be, stock prices are up a lot. It's AI bubble. But if you hear people who think a little bit more critically, they say, well, what's the multiple? Historically, what's the multiple been? How is it that NVIDIA's got a lower multiple than Walmart, but you're calling it a bubble, right? Or Costco or what, you know what I mean? Like that you go through. And so you start to like think a little bit more in depth and be more thoughtful. That to me is where ultimately like returns are driven from, but also just the ability to navigate the world, right? And maybe the last thing I'll say on this is, when I first was having a child, I remember sitting down with Pompliano, my wife, and one of the things we sat down, we just said, if we can only teach our child one thing, what is that one thing we want to teach them? And we talked about a lot of different traits and different skills and all this stuff. Ultimately, it's just be a good decision maker because it applies to everything in your life, professionally, personally, right? All this kind of stuff. Well, how do you become a good decision maker? You got to be able to ingest a lot of information, synthesize it, and then act on it, right? That's ultimately what an investor does. Are you a good decision maker or are you not? Can you put on the Republican goggles, take them off, put on the Democrat goggles, take them off, put on the independent goggles, take them off, and then to say, you know what? I'm gonna put on my own goggles. Here's how I see what's going on, and here's what I'm gonna do about it. That to me is where all this is going. And so whether it's Vanguard, whether it's Bitcoin or anything else, that's how I think the world's going to kind of develop. Is this only going to get more and more fractured in this manner?
Hi, I'm Matt Hogan, CIO of crypto asset manager Bitwise. Look, crypto can be confusing. There's so much noise and the space changes so quickly. That's why every week I write a 5-minute memo on the biggest stories impacting crypto in plain English. Why is Bitcoin up or down? What are people missing? Where should investors look next? Get the lowdown every week. Sign up to get the weekly CIO memo delivered straight to your inbox. Go to bitwiseinvestments.com/CIO memo. That's bitwiseinvestments.com/CIO memo.
Carefully consider the extreme risks associated with crypto before investing.
I love that. There are so many experts that are just like my way or the highway. And I've always thought about it where you could ask 9 different doctors and you'll get 10 different answers on advice on what to do or what your problem is. So I love that. Ingest as much information as possible and then go ahead and make your own decision.
It goes back to, have you seen these viral videos where doctors are using ChatGPT, like when they're talking to the patients?
No.
Like some patient will be like doing like an undercover video, they'll be filming, right? And they'll just be like, yo, no way, my doc's really on ChatGPT right now. Like, damn, I'm screwed, right? And to me, I'm like, well, hold on a second here. If my doctor is willing to go and do research and use superhuman intelligence to think through a problem, I like that. That actually makes me feel better, right? Because guess what I do when I'm trying to figure something out? I go and I Google it or I look it up on, an AI model or something, right? I try to go find more information. I read a book. I'm trying to understand it. So it kind of comes back to, again, do you believe a world where everyone that is external has all the answers? The media is always right. They just know they know the truth, right? The experts, they're right. They have expertise, like also. Or do you go through the world looking and saying, I want to hear everyone's opinion, but I'm also going to question everything? That is a much harder thing to do. It's not as fun. Like, could you imagine going home from work every day at 5 o'clock, shutting your computer, not worrying about what happens, emails, no one bothers you, whatever, till 9 o'clock the next day, turn on the TV, Looks like Pete Hegseth. Yeah, he's a bad guy. Go all of a sudden, get the newspaper. Economists say tariffs are inflationary, right? And you just go about your day. That would be a way easier life. You wouldn't have to question a single thing. You wouldn't spend a single brain cell having to critically think. But you probably would end up in a world where you're not in a good spot. And so I think that's really the whole thing is just like, are you willing to do the hard intellectual work of critically thinking? Or are you going to, Bitcoin went down 40%, must mean it's going to go down 90%. I should sell it. Or are you the type of investor who says Bitcoin's down 40%? If I liked it at 126, let me go look at the fundamentals. If the fundamentals are better, but the price is lower, it means that it actually is better priced. Maybe I should actually be buying it versus selling it. Again, but maybe if I go and I look and the fundamentals are worse and the price is lower, then maybe that's a bad sign. Like that's the type of thing of just critical thinking. Just if people can do that, I think they'll be in a much better spot.
I like that. Let's end on this last topic.
All right.
Fun one. Michael Dell and his wife going to invest $6.25 billion in Invest America. Invest, donate, whatever.
I like invest. I think that it's an investment in the future of America. Yeah, I mean, it is a donation. It's a philanthropic element to it, but it is an investment in 25 million children.
That's amazing.
Listen, you want to know my biggest takeaway from this? One, Brad Gerstner ain't going to get nearly as much credit as he deserves. The fact that he has been able to push this thing forward from an idea to now it is law, this Invest America Act, where kids who are born after whatever, I think January 1st, 2025, we got a couple of those. They're going to get an account with $1,000 in it or whatever. Like, I like that idea. I think that's great. But now Michael Dell's saying, well, wait a second. What about all the kids who are still young but don't meet the deadline? So what they're doing is for 25 million kids, they're going to give them $250 each. A private citizen is going to give them $250 each, $6.25 billion total. And what I find most interesting, direct investment in kids. This isn't, I'm going to give it to the school and the school is going to go buy computers and the computers may make it their way to the kid.
Turns to 80 million,
yeah.
turns to 60
this isn't let's send money to some foreign country and all of a sudden the president's the richest guy in the country. This is not, let's send money to a nonprofit that only 40% of the money goes to the cause. This is not, let's send it to an NGO where there's fraud and somehow it ends up funding terrorist organization, internationally and that stuff. This is, I'm going to take the money, I'm going to put it directly into the account for 25 million children in America. And the way I understand the program is they're going to have an app on their phone that they can look at, they can open, they can see how much money they got. And then anyone in their life, parents, teachers, friends, neighbors, whatever, can put more money into the account. All of a sudden, guess what? Kids should be asking for money for their birthday, for bar mitzvah, for, confirmation, right? For whatever they got going on, graduation, everything. Give me money in my investment account. Imagine a world where that's what kids were saying. Not give me the latest, video game, not give me the latest, whatever crazy thing. Instead, it was just, I need more money in my investment account so I can continue compounding my wealth for the future. If you meet a young kid who's doing that, hey man, this is what I'm talking about.
Hey, it's not always the most fun answer, but give me the gift that keeps on giving.
Correct.
Right?
Yeah. Look, the thing I do believe is you have to give people hope. And that's really what these accounts, in my opinion, are. Yes, the money and the compounds and all that kind of stuff. But these kids now have hope of a brighter future. They feel like that the system is helping them. And I think that we underestimate, because it's not very quantitative, how do you actually measure the impact of hope? And when kids have hope, usually maybe get up a little bit earlier, take school a little bit more seriously, right? They start to understand the world. They start to be a little bit more ambitious, that there is a path. But if you're like, look, no matter what I do, I'm screwed. Let me go eat junk food, sleep in, school. I don't even know where that is, right? I'm out.
Yeah.
We'll see.
All right. Awesome. That's all I got for you.
All right. Thanks. Talk next week.